Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the impressive Australian dollar holds its gains since breaking over 71 cents. The extended upside move on Thursday, looking from a high of 71.46, a little bit of profit taking is coming back into play. Keeping the bullish uptone is from the hawkish RBA tone, which outweighed a firmer US jobs print. And with softer Chinese CPI stabilizing regional sentiment, the RBA officials reinforced that the inflation remains too high from data today, keeping the expectations for further tightening alive. Meanwhile, the US dollar was somewhat stable around 96.80 after the Bureau of Labor Statistics reported that the US economy added 130,000 jobs in January versus a 70,000 forecast, while unemployment dropped to 4.3 from 4.4%. Back home, though, the RBA's decisive hawkish policy statement triggered a sharp repricing in rate expectations, pushing the Aussie higher through levels not sustained since early 2022. While markets now price a roughly 90% probability of the Fed holding rates at its next meeting, up from 80%, we now look towards the weekly initial jobless claims due later today, and also the US CPI due out on Friday. So turning to the technicals, there is some bearish divergence from the RSI and the MACD. I'm a little bit cautious at these highs as we could see a drop as it is somewhat overextended and a little bit too high from the view of the rally that we should see some profit taking. And if so, we could see a pullback to 70.85 or down to 70.35 and reassess from there. Turning to the euro, the market is negative into the third consecutive day after a firmer US job report and also hawkish Fed commentary, which has made the market rethink on a rate cut timing. The move did briefly ignite an upward momentum for the greenback, but didn't last that long. So just recapping on the figures, the payrolls come in 130,000 in January versus a 70,000 job expected, though a revised 48,000 gain in December. Looking at the technicals for the euro, well, the market is expected soon to take another upward step, and that is towards 119.20 on to the region of 120. I still feel from a broader perspective that we could still expect the rally from euro. This should limit any downside expectations. The dollar yen into the fourth consecutive day and prints a low of 152.26, getting very close to its target now, 151.15.55 area, where we could see some profit taking. So don't get too bearish at the bottom of the range unless we do see a break beneath 151, as this would open down at 146. In the meantime, we are a little bit oversold and we could see a bit of bullish divergence here. So let's see if we may or expect profit taking to return from the lows and possibly see a bounce back to 153 and reassess. Sterling, well, the market is still a little bit negative and an engulfing candle could put a bit more weight on the downside, but I feel there is demand lurking somewhere around 135.80, and if so, could get a correction. I feel the pound is still a little bit on the weaker side, but still a little bit underperforming, and therefore could see initially an ignite to the upside to 137 to 138. Turning to gold, we can see that the market is somewhat in a bullish case, even though we're seeing a mild pullback. But I feel overall 5,100 is still on the cards, and 5,200 could be next. And with the broader view for 2026, 6,000. Any weakness, well, that remains to be seen in terms of how deep it can fall, because the trend line is around 4,600 and we have seen these moves down, so do be on your guard because we're getting very tight ranges at the moment and therefore could see another flush to the downside, but overall the bulls are likely to return, where this trend line still very impressive. Finish it up with oil. Well, the market's still heading to that top side target around $66, any weakness to be limited, and maybe even seeing an extension if we see a break of 66 onto 68. Well, that's a wrap. Thank you for joining me, and as always, look out the intraday report and hope you enjoy the great start to the day.